I wish someone had told me this years ago, because buying silver miners too early is one of the fastest ways to burn money. And right now, most people are doing it wrong. I'm Aldagio and I focus on timing gold, silver and commodity miners using market structure and risk-based analysis, not emotion. In this video, I'll show you exactly what needs to happen before I'm willing to buy silver miners and what would keep me out. Because right now, we are at a decision point. Here's the key point most investors miss. Silver corrected aggressively with a crash of 47%, but silver miners didn't collapse the way they normally do in corrections. They only corrected around 23%. And that tells me something important. There is underlying demand, but strength alone is not a buy signal. That's why strength without confirmation is where most people lose money. And the mistake most investors make is confusing relative strength with confirmation. Relative strength shows potential, confirmation shows probability. And this framework works everywhere. Crypto, tech stocks, commodities, any volatile assets. Most people don't lose money because they are wrong. They lose money because they are early. Therefore, in today's video, I am going to show you two scenarios, two methods on when and where and why I will buy silver miners again. And those methods you can use on any assets, okay? So this will be a video not only for silver bucks, for silver miners investors, but for everyone who is trying to make money in the markets, in any markets. All right, so let's start with the first scenario. I'm gonna show the method, the scenario on some silver mining stocks. So we start with the first scenario, which is structure break on the chart of Guanajuato silver. As many of you already know, Guanajuato silver is one of my favorite mining stocks and I already bought down here. I explained why in the video on the top right corner. You can check it out if you want. And I'm looking forward to buy more in the next coming days, in the next coming weeks. And the first scenario, which will give me a confirmation to buy again, to increase my position size, will be a break in market structure. So as you can see, we are currently in a bullish uptrend, okay? We form higher highs and higher lows, all right, guys? So we broke out of this sideways range and we are currently retesting it again, okay? After this big and exponential upside rally breakout. So therefore, the current market structure on the higher time frame is obviously bullish, higher highs, higher lows. But on the lower time frame, on the 1 hour chart for example, we can see that the market structure flipped from bullish to bearish. We are forming lower highs and lower lows. And as long as this bearish market structure holds, I am not buying so far. Except we flip it. So for example, if we form a higher high right here above this last lower high, okay, I'm looking for a higher low entry because this would signal me that on the lower time frame, we broke the market structure from downtrend to uptrend, from bearish to bullish. Meanwhile, you always need to remember this and keep it in the back of your head. The higher time frame market structure is still bullish. We are still in an uptrend. So I will trade or I will invest in this market structure break, in this trend reversal on the lower time frame. So as soon as we see a break and a fallback into this recent lower low, I am looking to buy this possible higher low, okay? Which will then give us, if the scenario is correct, which will then give us a higher high again, okay? And this would be the ultimate confirmation for a shift in market structure on the lower time frame, so that we will go higher again. All right, so this is an example of the break in market structure scenario on Guanajuato silver. Let's go to another one, and this one is silver X mining. On the weekly chart, we can clearly see we are in a bigger sideways bottom range, but within this sideways bottom range, we broke out from this lower range zone. Okay, we had such a thing 1 hour to silver accelerating up move, and on the daily, we are obviously forming higher highs and higher lows, but on the 1 hour chart, on the lower time frame, we are currently in a bearish market structure. We are currently falling lower. We are forming lower lows and lower highs. Therefore, in confluence with this pattern, for example, but just in general, no patterns, nothing. Therefore, just basic market structure, we can see high, low, lower high, lower low, lower high, lower low. Okay, we are obviously in a downtrend on the 1 hour chart. Meanwhile, as I already said it in 1 hour to silver, we are in an uptrend on the higher time frame chart. So for us to break this market structure, for us to, or for me, to see a high chance of the trend shifting to the uptrend again, so for the lower time frame trend going into sync with the higher time frame trend again, which is bullish, I want to see a break in market structure. I want us to break this high, this lower high, and since they are pretty close, this lower high as well. Okay, when we break those, I am buying at a higher low. All right, higher high, higher low, higher high, maybe higher low, and then we will pump again. So therefore, this is the strategy I am using for my first scenario. Okay, the structure market break scenario. And of course, you can say that it isn't that profitable, or you won't have the best entry price because you could have been buying here instead of buying right here. Okay, you would have had a higher entry price, but at the end, it's all about preserving money, not losing money. That's the first rule from investing. Don't lose money. And on the second hand, you have a much higher chance for actually buying the trend reversal instead of trying to catching a knife. And for example, we form another lower high and we go even lower. Okay, so I rather buy up here instead of buying down here, but with a confirmation that the price will actually go higher again instead of falling lower. Okay, so that's scenario number 1 based on those two mining projects. You can do this on any chart, okay, on any mining chart, on any crypto chart, any other Nasdaq tech stock chart, whatever. So I need to see a break in bearish market structure on the lower time frames and higher highs and higher lows. That means buyers are taking control again. So as I already said, this is the safer option, but you will likely enter higher, but it's not that important, it's not that bad, as I already explained it to you. So let's go to the second scenario, which is higher time frame support. So based on silver core metals, for example, you can see that we are also within a big range. We just broke out of the range lows and are in a nice bullish uptrend. And I draw a support zone right here, which is also the mid level of the higher time frame range. So we have a nice higher time frame support right here between $9.17 and $8.04. And therefore, right now on silver core metals, let's go to the first scenario again. You can see that we are forming higher highs again, okay, on the lower time frame. But in my opinion, the overall market isn't that bullish. You can either say you can enter right here based on this scenario I just explained to you, speculating that we will see higher highs, okay, on the lower time frame, which will confirm a flip in market structure. But in my opinion, this is just a downtrend which continues. So in my opinion, this isn't a lower high and this isn't a higher high, but this is just the move down, this is the move up, and we will go lower. It doesn't need to go like this, okay? But the probability that it will happen like this is higher than the probability of the price flipping bullish on the lower time frame again. So currently on the lower time frame, we are forming a high right here, which could possibly give us a lower low right here, and this will bring us down to my higher time frame support. Let's go back to the daily chart, okay? So this will bring us down to my higher time frame support, and even though we don't have a confirmation of a shift or a break in market structure on a lower time frame, I am still willing to buy down here, taking the risk, because this is higher time frame support. And within higher time frame support zones, there's a high probability that we will actually see a break in market structure again. So therefore, let's go on the forward chart again. If we break in here, I will be buying, because the probability that we will see a higher low right here again and form a higher high, okay, above this lower high, for example, which could be formed, is higher than having a break in market structure right now above this higher time frame support, because there is no higher time frame support at the current prices, which would give us a higher chance of flipping the market structure. Of course, we have those momentum trend lines, but obviously those only hold strong while the overall market situation and also the price of silver is actually bullish. The sentiment is bullish, but right now the sentiment isn't that bullish again, okay? So of course, higher time frame, everything is in an uptrend. Higher time frame, everybody's bullish, but short term, the market is more uncertain right now. Will it go higher again, or will it go sideways for the next couple of weeks on silver and for the mining stocks, or sideways slightly lower? Therefore, this is the second scenario, looking for higher time frame support, which increases the probability of a lower time frame market structure break, which will then give us good entry prices, where I am actually willing to take the risk buying at a lower low within a lower time frame bearish market structure, which could actually bring a trend reversal on the lower time frame. Let's show you one more example on 1 hour to silver for the exact same. So this time there's no example for scenario 1, break in market structure, but there's an example for our higher time frame support, okay? So as I already said, we have our sideways range, and in my opinion, the next higher time frame support is this previous local high right here, which we formed on the 29th of September, okay? Which is also a nice support zone, not just because of this recent local high, but because of this recent highs in the last couple of years, which are now obviously support, because buyers will buy here again at those previous resistance levels. It's just basic support resistance. All right, so therefore, if we see the price going into this zone, I am starting to buy more of 1 hour to silver stocks. And one more important thing, I don't go all in. For example, if I want to buy $10,000 of 1 hour to silver stocks in the next couple of weeks, I won't buy $10,000 worth of stocks today or tomorrow or whenever the price hits this zone, okay? I will buy in tranches. If we go to this zone, I will buy, for example, 2,500. If we go lower, I will buy another 2,500. If we go lower, I will buy 5,000, okay? So my average entry price will be around here. So you need to mark out not only one higher time frame support zone, but maybe 2 or even 3. So in this case, my higher time frame support zone is here and here, okay? Those are my higher time frame support zones, and the second one, which is a little bit lower than the first one, is also in confluence with this higher time frame uptrending momentum supportive trend line. So if this happens, if we see the price going towards around about 50 Canadian dollar cents, this would be a big support because we have this horizontal support and we have this trend line support. So we have 2 support zones, and using those methods, okay, you can increase your chances of making money. You can increase your chances of having an actually good entry, an entry which will bring you positive numbers on your portfolio over the next couple of weeks, over the next couple of months, instead of buying and holding for a year with a negative portfolio, before the actual trend reversal happens, or instead of buying the top. So as I already said, I want price to reach my higher time frame support zones, and that's the higher reward entry, but with higher short-term risk. Both approaches are rational, FOMO is not. One is safer but more expensive, which is scenario 1, waiting for the lower time frame break in market structure. The other one is riskier but higher reward. And if you want to follow how the silver miner setup develops, confirmation or invalidation, subscribe. I will update this as the data changes. I will update on the several mining stocks. And here I want you to comment down below your mining stocks you want me to analyze based on those two methods to give you my opinion. Where is higher time frame support? Where would I buy on a short term or on a lower time frame market structure break from bearish to bullish again? Write down your mining stocks down below, and I will most likely make a video if we get enough recommendations, if we get enough stocks collected. Now let's zoom out. We will take a look at the silver miners ETF and the silver juniors miner ETF, because if ZIL and ZIL-J can hold structure here, we likely see consolidation first, but not immediate breakout. And from a structural perspective, a few weeks of consolidation would actually be healthy. So going to the silver miners ETF first, we can see that we are actually right now, based on market structure, forming a lower high, which could lead us into getting a lower low before we flip market structure and go higher again. And this would tell us that we will see some more sideways action, but from a structural perspective, a few weeks of consolidation would actually be healthy. For example, if we get a consolidation until the end of March and start breaking out again in April, this would be really healthy, because the faster the corrections, the more aggressive the up move, which then tells us that we are close to the top of the current uptrend. Therefore, the longer the correction, the earlier we are within the current bull market cycle. And again, this correction would reset momentum before any potential push towards new highs. Let's check out the RSI, the stock RSI and the normal RSI. So therefore we can see right now on the SIL, which is forming a bullish pattern, obviously, a bullish continuation pattern, falling wedge. The silver miners ETF is resetting. We are at oversold levels for the stock RSI on the daily, and we are at the mid level for the normal RSI. And it would be really nice if we could break below, form a new low and reset right here, okay, before we go higher. Meanwhile, the price going lower again before we break out. This would be really healthy and bullish long term. Let's go on the weekly chart. As you can see, the weekly chart, we are still almost overbought on the normal RSI. But one important message for you guys: in a bull market, it's okay to be overbought for several months or several weeks on the weekly and on the monthly chart. So this overboughtness right here isn't that big of a warning signal, because this can go longer for the next couple of months, while the price of silver or the price of the mining ETFs go higher, get a quick correction, go higher again, and so on. The same, if you want to check it out yourself, you can go to the gold chart, go to the silver chart, click on the monthly chart, and you can see that the gold price is going for higher highs, higher highs, higher highs each month, while the RSI on the monthly is well overbought, okay? So therefore, on the high time frame, it's no problem. On the daily chart, it's nice to get a cool off, okay, to get a reset. And the same goes for the silver junior miners ETF. We're also forming a bullish continuation pattern right now, and with the RSI, stock RSI and normal RSI, we're currently also looking for a reset. On the weekly and on the monthly, of course, we are still overbought, but as I said, this isn't a warning sign. So here as well, on the 4-hour chart, if we go lower, we would still be seeing a bearish market structure on the lower time frame, but the breakout would confirm that we will most likely go higher, okay? So how deep can it go? Nobody knows. When will we break out to the upside again? Nobody knows. But how can you preserve capital and how can you make better entries for your mining stocks? I just explained it to you. And of course, trading, investing is a probability game. So it doesn't have to work out all the time, but it works out most of the time. And missing some upside is cheaper than catching a falling knife, guys. This is the important lesson for you to take from this video. Missing some upside is cheaper than catching a falling knife. Thanks for watching. In the next video, we are going to talk about some mining stocks which are currently looking really nice to buy. And if we get some entries, or if I get some entries, I will also update you in the next video on which mining stocks I bought in the next couple of, or I will buy in the next couple of days. Thanks for watching. Subscribe to the channel if this video was helpful and insightful for your investments. It would really mean a lot to me. I will see you in the next one. Good luck and have fun investing.